When you look at the stock market, it is clear that the last 2 years have been some of the best years in the history of the market. The S&P 500 grew by more than 100% since the crash of 2020. That is something unheard of. That is not usually what happens. Historically, you can expect around 10% at best, and if you're going to be conservative, then 8% annually. But as we entered 2022, January proved to be catastrophic. The entire market collapsed. The S&P 500 fell by almost 10%. Apple, Tesla, Meta, and everything else just went down the drain. It was the worst month since March 2020. However, while stocks have been suffering, the housing market continues to grow. Extreme low interest rates have kept pushing prices higher and higher, and experts have been predicting a crash since the beginning. But the question is, where is the crash? Why is the housing market still growing? Why hasn't the real estate market crashed yet? We will answer all of these questions and many more. But before we do that, make sure to give this video a thumbs up and subscribe. The housing market is very predictable and easily controllable by the Fed. There is always a demand for a house because everyone needs a roof over their head. And even if you have shelter, a house is one of the best assets that you can invest in since it provides cash flow. The demand for homes will always be there, but it fluctuates based on the prices. From 2017 up to 2020, house prices didn't grow at all because the economy was at its peak. If they were growing prior to 2017, all that investors could see in the housing market is stagnation. Mortgage rates were around 4 to 5%, which really hurt the demand for houses. But 2020 came in and lowered the interest rates to almost 0%. Making mortgages much more affordable. Buying a home at 2 or 3% is one of the greatest financial decisions you can ever make. That's what fueled the demand and pushed the prices to grow by more than 20%. The moment those super low rates go away, that demand will vanish, which is what experts have been predicting all along. But guess what? In the last 2 years, the Fed never increased the rates. They kept them at nearly 0%. At the time of this script, rates are still at almost 0%, but mortgage rates are slightly higher than they were in 2020. Of course, Federal Reserve Chairman Jay Powell has said the central bank intends to raise the rates this spring. But that's not certain because the Fed usually doesn't do what they say until they do it, or sometimes misrepresent the facts in order not to cause any chaos in the market. Back in 2020 and 2021, they kept saying that inflation is not an issue, although the Fed has the best possible data, and they knew it's a problem. But in order to calm everyone down, they kept saying that inflation is around 3%. Regardless, rising interest rates is not a matter of if, but when. It's a normal procedure. At the end of the day, if inflation is higher than 3%, that is unsustainable. The main question is, will the market crash when the rates are raised? The answer is probably no. After the 2008 crash, the supply of houses has shrunk dramatically. This chart perfectly illustrates how many fewer homes have been built since then. The government understood that if it aren't going to control the housing market, then we might see another such a crisis. So the supply of houses was already tight, which kept real estate prices to rise gradually. However, the pandemic just destroyed whatever was left of that supply chain. Although we are almost 2 years into the pandemic, the supply chain hasn't recovered yet. So even if mortgage rates will rise substantially, they aren't going to take house prices down because there aren't enough homes in the market anyways. We have been building the supply chain since the end of World War II. To make a single Timberland boot, for example, the materials would be delivered from 5 or 6 different countries to a factory in Thailand, where it will be assembled and then shipped all over the world, including the United States. So a closed factory in one place can affect the rest of the supply chain. That's why companies are reshaping their entire supply chains in order to be ready for another pandemic by relocating their factories closer to where the final product is sold, for example. That is going to take some time as we are learning how to live with this virus. About 91% of the home building companies surveyed by Zonda reported struggling with supply chain problems. The lack of material availability is making it take longer to build a home, and the delays and higher input costs are contributing to rising home prices. This is the most disastrous situation we have been since at least World War II. These are not the only factors. Corporations are buying homes to rent. Around 20% of homes are usually bought by corporate entities, which further lowers the supply of homes in the market. But the biggest threat is definitely inflation. Inflation has a deep psychological impact. If people expect their home to cost more in the future, especially in the foreseeable future, then they will less likely to sell now. Guess what does that mean? A fewer supply of homes in the market will keep prices rising. Why would you sell your house now when you can sell it for a 10% higher price by the end of the year, for example? So until inflation is solved or supply chains are restored, it is difficult to expect house prices to calm down. But why hasn't the Fed increased the rates yet? The job of the Fed isn't just to tackle inflation, but also to make sure that the economy is growing. And the last 2 years have been much more unpredictable than anyone thought. At first glance, it seemed like as soon as we come out with a vaccine, the problem is going to be resolved. However, the government struggled to vaccinate enough people. And secondly, new variants of the virus kept coming out which were not protected by the current vaccine. And thirdly, by the time we figured out how to deal with the new variant or convince the rest of the people to take the vaccine, the people who took the vaccine initially had to revaccinate. It's a never-ending crisis. Most government officials are coming to realize that no matter how dangerous this virus is, there is no way we can get rid of it entirely. And even if we do that, that would come at such a great cost that it doesn't worth it. So we're learning how to live with it. So the Fed is keeping the rates low until it is clear how the economy is going to move forward under these restrictions. What we can say for sure is that we'll not see a double-digit increase in prices this year. It is probably going to be around 5 to 8%, maybe even smaller. Even those who cannot make the payment on their mortgages can still sell their houses with a profit because of the shortage of houses in the market, which is another reason why we shouldn't expect any housing crash this year. If the Fed manages to bring down inflation to under 3%, then things will get much clearer. At the end of the day, these are all predictions based on the facts on the ground, but only time will tell what exactly will happen.